What is up, everybody? Welcome to another episode of Swan Signal Live. I am your host, senior analyst at Swan Bitcoin, Sam Callahan. Another amazing guest lined up for you today. But before we get into this, I must talk about Pacific Bitcoin. That is the festival that Swan puts on this October 18th and 19th. Check it out. It's going to be such a fantastic time. You can go to Pacific Bitcoin right now, pacificbitcoin.com, and you can use the promo code signal to get 10% off your ticket. And if you use Bitcoin, you can get an additional 21% off. It's going to be great speakers, workshops, side events, parties. It's going to be a beautiful time in Santa Monica. So go check it out, Pacific Bitcoin. There's also a webinar with our guest on this show right now. It's tomorrow, but it's going to be a little different conversation. It's going to be focused around retirement, the gold rush. So check it out. Larry Lepard is, that's our guest today, but check them out tomorrow too for an exclusive webinar. So you can hit this QR code right now to sign up. I think it's really interesting to think about Bitcoin in retirement accounts. So attend. And that is who we're having on right now. So we're going to be talking with Larry Lepard. He's been on the show before. He's extremely popular. He brings a ton of experience in markets. He's the investment manager at EMA. Larry, my friend, welcome back to Swan Signal Live.
Hey, Sam, thanks for having me on. I don't know about this extraordinary guest stuff. I'm just a squirrel looking for a nut.
Hey, I think you're extraordinary, my friend. Extraordinary to talk to. I love talking to you. You have such a wealth of knowledge.
So here we are.
Here we are. You know, I think we were kind of talking before the show, and we feel like there's kind of like a shift that's happening in Overton window when it comes to the debt and the deficits that they're running right now. I go to any mainstream media like Wall Street Journal, Financial Times, Bloomberg, and I'm just seeing headline after headline after headline that could basically be viewed as marketing material for why to buy Bitcoin.
Exactly.
So what would you say on that? This
I
Overton window
completely agree.
shifting.
I mean, it's just stunning to me. I mean, and the markets are doing it too. I mean, the two sound money assets, the superior one, Bitcoin, and the slightly inferior but still good one, gold, are at or near record highs. And to me, that's all the signal that you need. I mean, that is the Swan signal that, it's becoming more and more people around the world are becoming aware of just how fiscally messed up things are. And as you point out, the mainstream media has picked up on it. A lot of high profile folks have picked up on it. Like the most notable example of it was the Monday article in the Wall Street Journal that just talked about the debt and the debt problem and the fiscal irresponsibility. It's becoming mainstream news, as it should. We've all been watching this unfold for years and have known this problem was coming, but I don't think the rest of the world was as aware of it as we've been.
Well, it's becoming like too big to ignore, I feel like. And the CBO's own projections are calling it unsustainable. They're saying that GDP will get to 166% in 2054. That's assuming there's not going to be any recession. And then they expect the deficits to get to 2.6 trillion in a few years. And so like even the president of the CBO itself, there was an interesting article in the Financial Times warning about the risk of a similar situation unfolding like the gilt markets that happened in 2022, where one of the policy makers there started to do tax cuts or proposed it. And then that just is what did it, where the market just rejected it. You saw interest rates spike. You saw the central bank have to come back and to start doing bond buying activities to bring it back down. You saw the pound get like really hit hard. And this is the president of the CPO warning that we could be set up for something similar. I mean, it's pretty extraordinary.
It's a big deal. I mean, I remember that like it was yesterday, and it was a crack in the system. And these cracks just keep coming one after another. Silicon Valley Bank failing was a crack. Even last fall, when the 10-year went very quickly, went up over 5%, and it immediately brought out 15 Fed speakers who said, no, don't worry, we're going to be cutting soon. The rate hiking cycle is over. I mean, they realize they're walking on a tightrope, and that they can fall off into inflation or deflation, and they're trying to strike a balance. But honestly, my view is they're playing a losing hand, and it's an impossible task. And at the end of the day, they will print. I mean, if have your guy pull up the M2 chart, that we were talking about pre-show. What we can see is that there we go. this is going to continue, right? and this is the entire investment case for sound money. The government cannot stop printing in a system that's debt-based and Keynesian debt-based, and where if they did stop printing, they would have a deflationary collapse. And
Yeah,
so
that's
the fundamental underlying thesis of what we're talking about.
Yeah, that's monetary inflation in one chart.
Exactly, debasement. Yeah.
Yeah, I don't. There was also like an interesting interview with Ken Griffin, the billionaire hedge fund manager, and he was asked what's the number one risk that he sees that the market's not talking about, and he said the sovereign risk of U.S. credit. He said the fact that it's not AAA anymore. He said they're spending is up 20% in 2 years, and then he said, who is going to buy these bonds? He said will there be a loss of confidence in owning an ever-increasing stockpile of debt? And he thinks that what they will resort to, because there's no IMF, nobody's going to bail out America like any other country. He said that we're going to start funding domestic liabilities with domestic money. And if I could decode that, it means money printer go burr.
I think that's right. And it's not just him. It's Mohammed El-Arian came out and said something recently. And as you and I were discussing pre-show, Larry Fink, has been taking his swipe at it. I mean, that all of these people are coming to realize the Overton window has shifted. And I think everybody, including the markets, is becoming more and more aware of this. I mean, Druckenmiller said something along these lines, has said several times along these lines that it's an underlying problem. And, Jay Powell said it. And it's kind of stunning to me that here's a guy who's the head of the Federal Reserve, who has actually admitted that the system where debt is growing faster than GDP is unsustainable. And of course, if I were a congressperson, the next question I would ask is, okay, and so what do we do next? And that part just never goes, never gets answered. And, it's Herb Stein's law, right? If something cannot go on forever, if something cannot continue forever, it will end. I think the piece we're all questioning, we don't understand, is when will it end? Because and it feels like it might be a long time, because they've been pretty good at kicking the can for a long time. But it also feels like it's getting a little bit more acute right now.
Yeah, well, you had Jerome Powell, like you said, like what are they supposed to do in this period where I would say fiscal policy is dominant, you could say.
Right.
And,
Correct.
If they try to keep interest rates high, that's just going to jack up the interest expense more, which is an inflationary driver, just worsening the problem that they're trying to bring down with those interest rate hikes. And I think that's why you hear this Jay Powell walking this line, right? Last week, he said things that you're just like, what? Because he said, financial conditions are tight, and I'm looking at, and I'm seeing like meme coins ripping. I see the stock market at all-time highs.
Right.
What is he actually looking like? You can't even just. It's like, what's the rationale behind a statement like that when you just look out into the world?
And he also says things like, inflation is running a little bit hot, but we still think it's going to come down, and so we think the cuts are appropriate. And ignore the man behind the curtain here as we change this quantitative tightening, because, and I found this amazing, and in his presser he even alluded to, the 2019 repo blowout. He said, well, it's clear that, the plumbing is a little unclear, and therefore maybe we want to taper this QT so that we don't find ourselves in a situation where we don't have the right amount of money in the right place at the right time. And I just thought, wow, that's interesting for him to admit that. Mm-hmm. I think Lori Logan, who is, kind of his internal financial plumbing person, has warned him that if they continue this QT and the reverse repo gets drawn down to a low enough level, there's going to be a shortage of money in the system. And what you and I think both anticipate is that at some point in time they're going to have to change direction, and printer is going to go burr. But so far they've been able to kind of continue with the pretend that he's Paul Volcker. I don't think he is, but that's what he wants to be. So.
Yeah. It seemed like Powell's like priming the market with that messaging last week, but it's funny because I feel like the market understands these dynamics a little bit, because that's why, like, right when he started to signal it, you saw the stock market rip, gold rip, Bitcoin ripped 6K intraday.
Absolutely.
When he did
gold
that.
too, gold and silver, same thing. They all caught a bid just immediately. I mean, and that's why, as we talked about earlier, the gold and Bitcoin are hitting these record levels, and in spite of higher rates. If you could pull up the tips chart, I think this is a very interesting chart. First of all, I want to credit Luke Groman for this chart. This is in his service, which I highly recommend everyone subscribe to. It's just an outstanding service. What this chart shows, it's kind of confusing, but let's just kind of walk through it. The yellow line is the price of gold on the right-hand scale. And as you can see, it kind of bumped up against 1900 in 2011, bumped up against 2000 a couple of times in 2020 and 2022, went back down. And now notice it's broken out. 2100 going above 2100. That's a clear breakout in the gold price. Of course, nobody's really talking about it because everyone's more excited about Bitcoin, as they should be. But it's been ignored. But the blue line is an interesting thing. So let me describe what this is. It's the inverted real rate of interest. And if you notice pre-2022, these two lines were fairly correlated, which is to say that, as real rates got higher, gold would go, or I'm sorry, as real rates trended lower, gold would go higher and vice versa. But now Powell has come in and he's raised rates substantially to the point where the Fed funds is 5 and change, and the reported inflation is in the 3s. So that implies that there's a positive 200 basis points of real return in the bonds these days, and the 10-year. And and that's, as you can see on the left-hand scale, it's inverted. But notice the separation. These tightly correlated series broke and separated, and to me, there's a lot of signal there, and the signal is that gold smells it. Even though these rates are high, gold is saying, hey, you know what? We know they're going to have to print again, and therefore give us some gold. And
that's
obviously,
decoupling.
if you did a similar chart with Bitcoin, it would show similar, with a more volatile swings because of Bitcoin, it would show a similar kind of set of outcomes. So.
Yeah, and it seems like central banks themselves might understand it too, the way that they're hoarding gold lately, right? So let's actually throw up that Tavi chart, Jacob. We can kind of walk through this a little bit. Because Ken Griffin was asking about who's going to buy our debt, and a lot of people have looked at foreign investors. So the Tavi, the gold foreign investor chart,
central bank chart is the one you're looking for, Jacob. Title is Foreign Central Banks at the top. It's dark.
There you go. There you go. So this chart is very interesting. So credit to Tavi Costa. I think it's a phenomenal chart. It's looking at the amount of treasury issuance bought by foreign holders or foreign investors. And then it also looks at central banks accumulating gold at a record pace. And so what are some of your takeaways from this chart?
Yeah, so there are a couple of interesting things going on here. I mean, the first thing to note is the blue is gold as a percentage of global international reserves. And, and by the way, it doesn't continue back to the 30s, but the scale is on the right-hand side. But as you can see, gold played a very important role, a large role in international reserves, 60 or 70%, and we went off the gold standard in 71. And it continued because the price of gold went up a lot. It actually peaked kind of in 1980 at the peak price of gold. And then, of course, gold got demonetized, and people just didn't care about it. And as a result of that demonetization, you can see it sliding down so much. And really, the key reserve asset became the debt 10-year bond, which was the white line. I don't know if you can bring the chart up again, just so I can refer to it. But and as you can see, the white line, people were holding. Foreigners were buying our debt from, the 1980 onward. And, and they increasingly held large amounts of debt. And so the U.S. was in the very enviable position of being able to export our inflation. And to the degree we ran deficits, which throughout most of that time we did, the foreigners would buy it. And then something happened in 2014, and Luke Groman actually points this out, and the foreigners stopped buying our debt. They started to disinvest in our bonds. And so, it's interesting that trend has accelerated as I think foreigners have become more and more aware of the fact that the U.S. federal government has a fiscal and spending problem in turn. And it's small. It's not as though gold has taken off, but it's interesting to note that since that same 2014 period, the blue lines have gotten larger, and I think and continue to get larger as more and more central banks are buying gold as a reserve asset as opposed to buying treasuries as a reserve asset. And so that, again, indicates the belief that the U.S. fiscal situation is not sustainable.
Yeah, and I bet they're stopping the purchases or reducing the rate that they're purchasing them, because not only maybe are they getting queasy when they look at the rate of spending, but also the weaponization of the dollar, right? And how
Well,
they're
that's right.
diversifying that risk.
Yeah.
I think you brought up Ronnie, and Ronnie shared an interesting report from the World Bank, but it's looking at like which countries are buying gold the most in their reserves. And the report showed that in half of the 10 highest annual increases in gold stockpiles since 1999, the affected country was sanctioned during the previous year or two. And so
Interesting.
kind of shows that they increasingly turn to gold to protect themselves against the threat of sanctions, or the weaponization of the dollar, which has increased over the last decade or so.
Yeah, I mean, so yeah, interesting point you bring up. I mean, the U.S. grabbing the $600 billion from Russia, was, in my opinion, a very short-sighted move, because it really sent a message to the world that, the treasury assets, the treasuries that you own can be seized, and therefore, do you really own them? And it has to have been noticed in every single capital all around the world. And people are thinking, okay, if we want to store wealth, do we store it in U.S. treasuries, or do we store it in gold? And it's like, you know what? I think I'll take the gold because I know that the treasuries, we've just seen the U.S. seize treasuries, and so that's a big deal. The other thing that's going on is that the dollar used to be very strong, and used to be kind of, well, it is still the world's reserve asset, but it used to be 90 some odd % of all transactions in the world were dollar denominated, including all purchases of oil, which is a huge commodity. That's really changed, and that created a bid for the dollar. I mean, every country in the world had to buy dollars in order to then turn around and buy oil if there were oil importers, and China is a big oil importer. And so that's been changing, because what's happening is the Gulf states and other oil exporters, including Russia, are willing to accept the currencies of some of these other countries in exchange instead of the dollar. So, you've got the Gulf states are buying oil or selling oil in yuan from China, and Russia is selling oil to China and accepting yuan. And to the degree that either of those two parties don't have anything they want to buy from China that's yuan denominated, they can quickly swap the yuan into gold. And so, this again is Luke Gromen's thesis. I credit him with being kind of the first to uncover this, but he honestly thinks that what's going on with gold is it's becoming a commodity currency. It is becoming it. Gold, in my opinion, what's going on is gold is slowly replacing the U.S. dollar as the neutral reserve asset. And I think that's occurring just logically because of the way that the U.S. has done two things. One, we seized, other people's treasuries, which sent them a very strong message that, we couldn't be trusted in that respect. And two, if you look at Washington, D.C., and, they just passed a $1.2 trillion spending bill in 48 hours. And, that's pretty much par for the course over there. They're kind of out of control. And so, these are logical things, but they don't, it's not as if we're going to go, the dollar's going to lose its reserve status overnight, right? I mean, it's just, it's just at the margin, you can see the trend. So,
yeah, I mean, it's just insane, the spending that they just continue to do too. I mean, like, we know that when debt to GDP gets to these levels, there's a few options available, right? Cutting spending, they could raise taxes, they can try to inflate their inflate the debt away, but also they can try to grow their way out of it, right? That'd be the best option. And this is actually what Larry Fink said. He said it's not reasonable to expect the spending to slow down or to raise taxes, both politically and mathematically, but he thinks that we can try to grow our way out of it through investing in infrastructure. But to me, he even asked, but the debt's so high, how are we going to pay for it? And we just had a $1.2 trillion infrastructure bill passed a couple of years ago, and we have this bridge collapsing now. And I can't help but think about the aging infrastructure, because that bridge was built in 1977. It didn't have protections around it like a lot of the modern bridges have. And would have been prevented if we could have updated our infrastructure earlier? And I just, like, I've looked into this, and the American Society of Civil Engineers, every 4 years, they do a report card on their infrastructure. So they look at the roads, the dams,
Sure.
sewage, grid, and they gave us a C- in I think 2021.
Wow.
And even if it's a good idea, can we even afford it? And if we are spending on an infrastructure, isn't that just more inflationary, like to this environment?
Well, yeah,
right?
yes, it is. And look, I think that one of the things you're alluding to is the fact that all roads lead to inflation. I don't think there's any,
Yes.
in a society that has this much debt, if we don't have inflation, the alternative is worse. It's a collapse. To your point about the infrastructure, I totally agree. I mean, it would have helped if we hadn't blown $6 trillion trying to secure the Middle East and Afghanistan, right? I mean, we spent a lot of money in ways that weren't constructive. If the government were to print money and spend it on infrastructure, one could at least, and Luke does, one could at least make the argument that, that's a productive investment. I mean, you're improving, your country's operating ability to the degree that you're investing the capital in infrastructure. It's a whole lot better than, printing money and giving it to Wall Street to gamble with, which, they did that after 2008.
Totally.
But in any of these cases, Sam, I think sadly what's going to happen is there is going to have to be inflation, and it's not, and we're not talking trivial inflation. I'm not talking 3%. I'm talking much higher than that. And I don't like saying that. I'm not trying to be a doomster. I'm just looking at the math and saying, unless the alternative would be to take an extremely high, extremely aggressive approach about raising rates like Volcker did, and to take a very painful downturn, a recessionary downturn. Cut back expenses and everything else. But when Volcker did all of that, the debt to GDP was 30%. Now it's 125. One other statistic I think is worth throwing out there just for people to consider is that Reinhart and Rogarth did a great study of countries that had gotten to the point where debt to GDP exceeded 130%. And keep in mind, we're in the 120s right now, depending on what you look at. But so we're real close to 130. And in 56 of those countries, and 55 of them, that ultimately led to either a currency collapse or very, very high rates of inflation. 55, and the only one, the 56th one, is Japan, and it just hasn't happened yet.
Well, right now the yen's crashing. They're trying
Well,
to
that's what I was going to
finally
say. I
raise
was going to
rates.
say it's just a case of yet.
The yen is literally they raised rates one time.
I have to say there's so many things in macro. I mean, the great thing about being in the macro business, you can be just wrong all the time. There's so many things in macro that just I find amazing. I mean, so the yen, so they decide they're going to start increasing rates in Japan, and the yen goes down. I'm like, what?
Yeah, that's so.
What's that all about, right?
Yeah, the idea is like, raising rates would, reduce the interest rate differential, so it kind of attracts capital.
You think the currency would get stronger, right? I mean, it's
yeah,
like,
exactly.
Yeah,
but not the case there.
They're
talking about currency intervention at the end.
It's very. It's what makes this game so difficult. That there are no certainties in any area, and every time all the inputs are somewhat different. I mean, I was on a call earlier with somebody today, and they said, what has happened in the last few years that you never would have expected? And I'll tell you what, it's to see the stock market at record highs again. I mean, I thought when the stock market was at record highs in late 2021 and we had the downturn in 2022, I thought, okay, this is it. This bubble has burst. Well, no, it's not. Here we are, and to see NVIDIA and the Mag 7, and, it's just, I mean,
well, I think no, personally, I just think there's just so much money still sloshing around out there. I mean, you could look at the M2 year-over-year growth being negative, but if you just look at still where it is compared to pre-pandemic levels,
way above trend. Yeah,
way above trend. And where's that money supposed to go? Right? It's going to pile into the stock market and or other ways to speculate. That's another, like we were kind of talking before the show about speculation, how historically in periods of high inflation, you really see speculation. Everybody becomes, stock pickers, gambling goes wild. And you kind of see that today with sports betting. And it's because they have to, right? Like people, feel hopeless. And so they're just like YOLOing into whatever, but also you have to own something to survive in an inflationary environment or you will suffer. I mean, And so that's why, like, where's the money supposed to go? That's kind of, I think that's why we see stock market at all-time highs, despite rates going way up. Like,
Right.
maybe gold. That's why, like, it's all kind of connected in my mind. I don't know if you have any
No,
views.
no, you're dead ass right, and the only right answer or thing to own is Bitcoin. I mean,
Hmm.
with a secondary choice of gold if you don't want the Bitcoin volatility. I mean, gold is second best. I mean, but you're right. I mean, if you just sit there, you're going to watch your savings melt away. And many of us know this. I mean, I think one of the great tragedies of fiat currency and Keynesianism is that you can't safely retire because you don't know how long your money's going to last because they're continually debasing the money. My father retired with a nice sum of money, not enormous, but nice. And by the time he passed, it had really gotten whittled away, and that was all because of inflation.
Yeah, and people are there's a lot of fear out there. There's a lot of fear for older individuals who are trying to retire, whether they have enough. This is really, I bring up that Larry Fink letter a lot right now because I just read it this morning, but he brings up how, we have a lot of focus has been around how to live longer, but not about how to afford the extra years that we can get now. There's
Correct.
been no way to do that. And he brings up some of these stats and they're really scary. I mean, he says nearly half of Americans aged 55 to 65 reported not having a single dollar saved in personal retirement accounts, nothing in a pension, nothing in an IRA or 401k. And then he also says the stat that we kind of alluded to, but the Social Security Administration itself says that by 2034, it won't be able to pay people their full benefits. And,
Oh God.
you
Yeah.
know,
I mean, look, yeah. When I go down that road, it gets so dark and so sad. I mean, look, I think the good news is that um, on a nominal basis, Social Security is not going to go bankrupt. I mean, and everyone is, people are going to get paid. The money is going to get put out there. The problem's going to come from a different direction, which is to say that the cost of everything is going to go up a lot. So I don't think we're going to have a default. I don't think Social Security is going to default. I think everybody who's promised money is going to get the money they're promised. I think the issue they have to deal with is a slightly different issue, which is what will it then buy? And that's why, I think it's very important for all people to try to hold, to the degree they want to save and protect their future, they want to try to hold assets that the government can't print.
100%.
And,
And
Bitcoin is one, gold is one.
right, real assets. I mean, that's really, another, comparing old inflationary periods with maybe what we're experiencing today. I saw this great piece in Cuppy's Corner, which is a great blog, comparing it to France's hyperinflation of 1789. And I'm a history geek, so I kind of love this stuff.
Yeah.
But he talks about, inflation starts to change the culture, the speculation. Speculators realize that they should borrow to buy assets. And then
Yeah. Oh, yeah.
eventually there's an enormous wealth disparity that develops between those who saw what was happening and levered up to purchase more assets and those who didn't, because you have to own real hard assets in inflationary environments. And unfortunately, I think a lot of people are unaware of that. So I think that's a message that we try to hammer and hammer and hammer. And obviously we think that Bitcoin is probably the best hard asset because it's
Correct.
the most scarce. It has an absolute fixed supply. The supply won't change due to increased demand, which makes it unique amongst all other commodities out there
Yep.
in the world. And so this is a point we kind of make because, like, even if you're not into Bitcoin, like, you have to figure out a way to protect yourself if we are entering this period of high inflation due to this reckless spending, deglobalization, all kinds of factors that are contributing to what we're
Yeah, no,
looking
that's
ahead.
that's absolutely right. I mean, it's yeah, the that's absolutely right. I mean, you said it well. The money is slowly but surely being debased, and everybody needs to have a strategy for how they're going to deal with that debasement. And I think in order of preferences, you start with Bitcoin, and then maybe, I mean, some people protect themselves with the stock market, and the stock market will provide protection. I mean, Apple's a great company; it will be around even with monetary debasement. They'll increase their prices; they'll have profits. So, but the people that I worry about are people who haven't thought about this issue and done anything in this regard in terms of protecting themselves, because they're not, I think a highly inflationary period is going to be rough, sadly.
Yeah, and like I think Larry Fink, he touches on like how hope
Yeah,
is the nation's greatest economic asset. And he
right.
said, I've been working in finance for almost 50 years. I've seen a lot of numbers, but the single data point that has me concerned is this one's more than ever. And it's the fact that young Americans, 4 in 10 say it's hard to have hope for the world right now. And he says,
Yeah,
how do we get hope back? And he says, I readily admit I do not have the solution. And this is the problem, I think. People are really good at pointing out the problems, but they don't have a solution. And this is why I like Bitcoiners, because we actually offer a solution to this really real problem
completely.
of a lack of hope and a lack of saving. Um,
Completely.
and
And I have to say, honestly, I find it a little bit disingenuous that a guy who has profited so enormously from the fiat system is now trying to kind of pivot and say, hey, you know what? This is kind of unfair and it's broken. And I'm like, you think? you know,
I know, right?
we've been saying we've been saying this for 20 or 30 years, fella. So now you get to clean up your act and join our side. You know,
Yeah, I mean,
you became a billionaire by playing this system like a fiddle.
by
And
securitizing mortgages, right? And
yeah,
that
and
that
now
turned
the
out to
fact
be
that you
a
say that there's no hope and you want to provide a better world. Well, calm down. There a lot of us have been saying this for a long time.
I know. Well, I did control F in the letter for Bitcoin. And he did mention it once. He said,
Yeah. Well, no, look, I mean, to his credit, he has pivoted. I mean, he thought this thing was complete fraud, a bunch of years ago, and he supports it now. I mean, when we look back at this, it'll be very interesting to see how people turned on it and how they came into the fold. I mean, I orange pilled this Chris Irons guy, who I think is a brilliant guy, nice guy, runs Quote the Raven, and he was very much opposed to it, very down on it. And I mean, if you're smart and you're open minded, you'll eventually get there. I mean, there's so many things that have happened that have really been positive. I mean, I think in the end of the day, the three judges, that ruled in favor of GBTC, being able to turn into an ETF and thereby force the SEC into letting the ETFs come out,
yeah,
those guys are going to be heroes. I mean, to be honest with you, I'm kind of shocked that we got the ETF thing through, and I'm overwhelmingly excited and positive about how the impact of the ETF on on what's going to happen to this asset. I mean, the biggest complaint I had in my client base, and they tend to be on the older side, was, yeah, Larry, we get it. It's sound money. Okay, it really works. We get that. Technology risk is low now, etc. But the fact of the matter is that the government's going to kill it. And
mm,
as Saylor has pointed out, the government didn't kill it. And in fact, the government endorsed it, and that took away a lot of risk and opened the door to $300 trillion of financial assets that can come chasing after this $1.4 trillion asset, much of which is not for sale. I mean, first of all, it's not really 1.4, because maybe 10 to 20% of the coins were lost, in the early days. And then second of all, there's a large cohort of us who own the balance of the coins who we're not selling for anything less than millions of dollars per coin.
yeah.
So, if these trillions of dollars of fiat assets decide they want to come chasing Bitcoin, guess what? They're going to have to consistently pay more than what we all paid, and as it should be. So,
Yeah, and like I mean, you have to give credit where the credit is due in terms of the pivot. I mean, maybe they see a way to make money, which is completely, it's capitalism, right? And these ETF products have been hugely successful for firms like BlackRock and the others that issued them.
yeah,
But at the same time, I think I heard that a quant analyst there was recommending, like a 5 to 10% based off his quant models. But he said, but technically a 28% allocation would be the reasonable, I think he said.
oh
But
yeah,
then
and wasn't there one guy who said 40%? I recall, but maybe I'm
well,
wrong.
I remember there was an old BlackRock paper that actually recommended like 86% or
Is that right?
something. Yeah,
Well, that's
because
extreme,
they
but
just like ran the numbers, right?
yeah,
Nobody in traditional finance would recommend something like that, I think,
yeah.
unless crazy risk profile or something. But like, I think he just ran the numbers and said like, well, technically, because Bitcoin was performing so well, I think this must have been during the last bull market.
Yeah.
But what do you think about BlackRock? I think I want to say Wisdom Tree came out yesterday and said they're adding it to a couple funds, their
Right.
ETF, and then also BlackRock added it to their $18 billion global allocation fund and also their $36 billion strategy fund.
It just
What do you
makes
think of
total
that?
sense. Yeah, I think it's a huge positive, Sam, and it makes total sense. I mean, look, the fact of the matter is that investment managers are charged with delivering performance. Okay, that's what we people who manage money get paid to do. My clients say, "How much money have you made for me? How much performance have you generated?" You know more about this stuff than I do. I'm giving you my money. Please give me a high rate of return. And here you are. You've got this asset that has outperformed every other asset in the history of the financial markets. I mean, on a 15-year, 10-year, 5-year basis, whatever you want to look at. I mean, you can find some short periods of time where obviously it did not outperform or it had a big correction. But in general, if you take a long enough window on it, it's been the top performing financial asset kind of ever. And so, one would have to say or ask any manager of assets, how can you ignore this thing? I mean, look at these numbers. And what is going to change that's going to make these numbers, what's going to make this trend stop? I mean, I always say that, what you want to do with a business, you want to invest in businesses where dogs are eating the food and there are more dogs showing up all the time. And Bitcoin's a classic example of that, right? The dogs are eating the food and there are more dogs coming to the party. And unless that changes, it's like, why aren't you long this thing? I mean, now, obviously the weighting is an issue, and if you're 80 years old and you can't suffer a drawdown, you can't go 100% into it. But, there's nobody who can't have 1 or 2% in it. If it goes to zero, they won't be affected. And if it does a 10 bagger or 100 bagger, it'll make a meaningful impact on their portfolio. So, to me, it's a no-brainer. And this is going to happen. The other thing that's going to happen, Sam, I think, is MicroStrategy is going to get big enough that it's going to get put into the S&P 500. So then you'll just have all these. I mean, as you know, the big trend away from active management to passively managed money has been an enormous trend over the past 10, 15 years. That's just going to continue. And as
I think,
right. And people are going to have to buy MicroStrategy.
Flows that it's like a flywheel with these funds and the ETFs with MicroStrategy getting included, and then it just all leads to demand for Bitcoin when it comes down to it. Like funnel it down.
It's very much a positive feedback loop in the same way that inflation is a negative feedback loop for the dollar. As the dollar loses its value and ability to buy stuff, people are like, why the heck am I holding this thing? Why do I want these bonds? Why do I want this cash? It's a melting ice cube. I just don't want to have it.
Yeah. And even, even like you said, if some of these institutional investors go 1%, 2%, 5%, like I was looking at pension funds and some global study said they manage $50 trillion in assets under management, and Kathy Wood was recently in an interview saying like, if we expect 5% from these institutional investors, that increases our long-term target from 1.5 to $3.8 million per coin or something like that. And price predictions are always kind of,
let's not go there.
Who knows? But like, the real point is that even a small allocation from these large institutional investors could have a significant impact on something as small as Bitcoin.
It's back to just the simple math: 300 trillion, financial assets, 1.4 trillion Bitcoin. Do the math. What piece of that 300 is going to come after the 1.4? I mean, the 1.4 is going higher. It has to. I mean, I wrote a paper in 2018 about this, and at the time, Bitcoin was worth 140 million. So it's done a 10 bagger since 2018, and because it was at 6,000, 6,900 when I wrote that paper. And the other thing on these ETFs, it's interesting, is that money's been coming over on the ETFs, and that's a good thing. It's been driving the price higher, but it's still these institutions take time. They don't do things quickly. It takes time to filter in. And here's a data point I think people might find interesting. We have a couple of clients, one of whom has an account at Morgan Stanley, and he went to his Morgan Stanley broker and he said, I want to buy some Bitcoin ETF. I want to buy, Fidelity or something. And the broker said, no, you can't do that. We're restricted. Even on unsolicited, we can't buy it. for you. We do have our own product, which takes some of the volatility out, blah, 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 pay us 100 bips, typical sleazy Wall Street thing, right? Buy our thing, not the real thing, right? And then another client of ours has an account at Edward E. Jones, which is, kind of a high-end retail brokerage, kind of boutique-y, but a lot of people with a fair amount of money in the United States use them. Same story. He went to his Edward E. Jones broker, said, buy me some of this Bitcoin. And I said, sorry, it's restricted. We can't do that for you. So now I think that's going to change, because what's going to happen is, Morgan Stanley and Edward E. Jones are going to realize that if we don't let our clients buy this, they're going to leave us, and so, but the point is, we're still climbing a big wall of FUD. And, it's still the people. I mean, there are a lot of people I know when I talk about buying Bitcoin and they look at the price, I say, and I'd recommended it to them all along the way. And they go, well, I missed it. I should have bought it at 30. I should have bought it at 15. Well, I can tell you what, when I was buying it at 1,500, I thought I should have bought it at 100, and no matter what price you buy it at, you always can look back 5 or 10 years and say, well, I'm too late. But back again to the big picture numbers, 300 trillion, 1.4, you're not too late. We're still, this kind of reminds me of like the internet in 95. And, we had a long way to go in 1995 on the internet in terms of penetration. So It also reminds me of, and I use this example in Madeira, it's kind of a new base layer of money. It reminds me very much of Microsoft in the early days. I think I told the story, I bought Microsoft and then I screwed up and I sold it because I wanted to buy a condominium, which is a logical thing for a young guy to do. But, I couldn't really foresee and understand just how every person in the world was going to have a PC, and every PC was going to need operating software, and Microsoft had a monopoly on the operating software for those PCs. And so, the network effect of it all just, it just kept multiplying for years and years and years. And, that's I think what's going to happen here. It's sailors, it's going up forever, Laura. I mean, it really is.
Well, everybody in the world needs a way to save right now. They need, every single person in the world is suffering from fiat debasement at different rates.
That's exactly right.
And so you think about the potential there just from a pure use case of being a undebasable store of value, and you start to get really interesting numbers going through your head.
You really do. I mean, I think Kathy's a little extreme when she predicts 3.8 in a few years, but I think the answer is the numbers are going to go up significantly.
Yeah, I think you're right too. It's been crazy to see the demand for the ETFs, given what you said, that it just takes a long time for like these institutions to move on something new. I mean, some of them require even like 3 to 6 months of trading data before they can list any new ETF products. And I think PNC Bank came out today and said they're going to offer Bitwise's ETF. And so that's another one that you see. You saw different RIA platforms. There's only like 2 major ones, Cetera and Carson, that has allowed these Bitcoin ETFs. And so it's going to take time for all these platforms RIA platforms that they use to start to offer them. And so we're very, very early days in terms of the penetration of ETFs in the infrastructure, let's say, for institutional investors.
And let me just say, there's a very interesting parallel here that some of your people may not know about, which is to say that, pre-2003 or 4, I'm not sure I have the year exactly right, but I'm pretty sure it was 2004. If you wanted to buy gold, you had to go to a coin store, right? You had to, go buy coins or buy bullion or find a specialist dealing in gold. If you had money in your brokerage account, you couldn't buy gold. There was no way to do it. And a gold ETF got created. Boom, GLD, the biggest gold ETF in the world now. And, at the time, gold was in the $250, $300 range area, and there was nothing in the gold ETF the day they launched it. And of course, now it's, 60 billion plus of assets. And in the time frame that, the demand that ETF created for gold in that time frame took the price of gold from $250 to $1,900 from the date of launch to the peak in 2011. So almost 7x your money, in kind of
in like a decade.
Yeah, in a decade, in less than a decade. And I'm not saying this isn't exactly analogous. Okay, it's different. It's a different asset and everything else. But the point is that when you open up a channel that allows people who have brokerage accounts to very easily say, "Oh yeah, give me some of that." It's a ticker symbol. It's gonna increase demand for it. Full stop. And so that's I think we will. I think we will look back a few years from now, and there'll be a lot of people say, "Oh God, I wish I bought a whole coin at 70 grand." I think in 10 or 15 years, it'll be a big deal to, your kids will say, "Holy shit, you're a whole coiner." I mean, you have an entire coin. Those things are worth $1 million a piece. Gosh, Dad, you're a millionaire. How did that happen? I mean, I think that will happen. But that's years out. That's not tomorrow. It's probably 2030 or so, but I think it's coming.
Yeah, you bring up the gold ETFs, but it seems like people are starting to dump ETFs.
Well, they are. Yeah.
Regular. Let's actually pull up that chart, Jacob.
It's a good chart.
One.
Yeah. So this is a great chart. I mean, yeah. Sorry, my dog's making some noise in the background. Okay. This kind of, I mean, people say gold and Bitcoin compete with each other. Okay, let's not kid ourselves. They both are forms of sound money. Gold market's a much bigger market. Bitcoin is an adopting market and therefore growing rapidly. And this is the GLD. The black line is the GLD ETF. On the right scale is tonnage. And so what you can see is that, it took a big note. First of all, notice how it took a big jump up when the money printing started in 2019, 2020. Boom. Look at, people were buying gold and the price of gold went straight up. Okay, that's all good. Now Jay Powell comes in, raises rates. We're trying to get everything under control. And guess what? People are selling GLD, perhaps to buy Bitcoin or just because for a while gold was kind of trading sideways. But if you look at it, and by the way, this is a Luke Groman chart as well. If you look at the red circle on the right, what you see is U.S. investors and investors in general are selling the GLD ETF, and yet the price of gold is hitting all-time highs. So what explains that? I'll tell you what explains that. It's foreign central banks are enormous buyers of gold. India and China, particularly China. And China underreports what they buy, but we can see what they buy because most of the gold in the world is refined in Switzerland. And Switzerland does report their export statistics. And the bottom line is, you and I, Sam, I think believe that Bitcoin will ultimately become the monetary standard of the world, the numeraire, given enough time. But, the world doesn't believe that yet. We're kind of on the cutting edge. And the world, I think, sees the monetary problems that are developing, and a lot of these central banks see the monetary problems that are developing. And I think they're likely to wrongly, but first they will choose gold as their reset mechanism or as their neutral reserve asset. Which is not to say that gold won't work. I say wrongly just because I think Bitcoin's a better choice than gold. But it's not to say gold won't work. Gold will work fine, but ultimately, Bitcoin is going to outperform it as it has, in the last 10 years. So
I would say gold might perform fine, but will it actually work as the foundation of a new monetary system?
Well, there's that too. Verifying it. Yeah.
Yeah. I just, you see them buying gold, and I think it's kind of a little bit of, do they understand the history of that, of how it actually leads to, the papering of gold because of some limitations, right?
Yeah, you pointed to the fatal flaw, which is you can't verify it. You don't know what anyone has. Everyone's lying. Yeah, it's hard to move, etc. All problems. And paper gold. Yeah.
Yeah, and you'd think eventually, I think it's only a matter of time before somebody realizes Bitcoin's potential, and does that.
Oh yeah. No,
who knows when that is? It's going to be a weird day where, like, if a central bank buys Bitcoin, it's going to be very mixed feelings. I'm going to be very confused, I think, that day.
But it's coming. I mean, El Salvador has done it, but it's a dinky little country. But they'll. Yeah. And I honestly suspect that others are doing it. I think Jason Lowery and the guys. I mean, Lowery said in a private conversation with my partner that the CIA and the Pentagon get it. I mean, they understand what an important strategic asset this is. And if they get it, my guess is that at a smart high level, somebody in China gets it and somebody in Russia gets it and some of the Gulf states get it. So I actually suspect there are some central banks or some national actors who are buying Bitcoin. I believe that to be true, but not reporting it yet. I mean, look, if you were trying to buy it and accumulate it, would you report it? I wouldn't. You'd keep your mouth shut.
Well, the U.S. still has a lot of Bitcoin. I saw that their U.S. holdings were up like $5.5 billion over the last couple of months, and that's despite them selling 2,800 Bitcoin a
I
couple
know.
months ago.
I
They're
know.
still up 5 billion. So maybe the
Maybe
Bitcoin they're holding will solve their
maybe
problem.
somebody will listen to Jason. I mean, what Jason says is that it's the Biden administration, the Treasury, and the Fed that all hate it and want to try and shove it aside. But the smart guys, the military guys get it. The Pentagon and the CIA, the strategic guys, they get it. They understand what it is. They realize how important it is, and their view is no. We got to be adding to this, not selling it. So it's DC. Who the hell knows who's going to prevail? But
Yeah.
there are competing views on it.
Yeah, well, I wanted to, it seems like the central bankers and, like you said, some of the people basically closest to the money printer who are basically just trying to continue to spend, continue to add to the debt burden that future generations that right now are feeling really hopeless will have to face down the road.
Yep.
Those are the ones that hate Bitcoin.
Right.
And these same central bankers it's like they're so optimistic. I don't know, Jacob, you could share that headline from the Financial Times. I read this headline and I was just like, central bankers see immaculate disinflation within reach. And they say it's going to basically, inflation's going to come down and there's going to be no sharp rise in unemployment. Everything's going to be great. And given their sterling track record of forecasting things, I immediately was like, uh-oh. Like I read that, I was like, uh-oh.
Yeah.
And so what are the odds? It seems like the market's basically pricing in the soft landing scenario that everybody said would be impossible if they tried to raise, rates at this rate with the debt levels. Now it just seems like the market's like, yeah, okay, like I guess everything's going to be great, and we're not going to see any kind of real disruption from this. Like,
yeah,
what's your take? I mean, you see that headline, and they're like wildly optimistic right now, and think that they can basically thread this needle. It seems like the central bankers are optimistic, which immediately makes me pessimistic.
Yeah, I'm with you, Sam. I'm pessimistic too, but it's like the guy who jumped off the building. He's flying until he hits the ground. I mean, Ray Dalio says the beautiful deleveraging. I mean, look, history is full of examples of credit expansions, and von Mises said it best. I mean, there's no way out of these things other than to stop the credit expansion and take the pain, or ultimately to a complete catastrophe in the currency that's involved. And so that's I think we're going towards the complete catastrophe. And the stock market hangs in there, I think, because the stock market actually, it's better than bonds. It actually does have some inflation protection. I mean, I personally think stocks are pretty overvalued. John Hussman supports that case. I mean, on a lot of measures, it looks like 1929 right now. So I personally don't have much exposure to the stock market other than gold and silver mining stocks. But everything will always look good right before it doesn't. I mean, there were people in 2006 and 2007 saying subprime was contained, and and we didn't have a housing bubble, and housing prices had never fallen nationwide, which was not true, by the way. In the 30s, they did. But there are always justifications for a bull market and for things being okay until they're not. And that's the nature of the game we're playing here with this Keynesianism and this this debt-based society, and you continually are playing a game of musical chairs. They're taking the chairs away, then eventually the music stops, and unless they call the chairs being printing money, and suddenly they got to go put a bunch more chairs in there, or else the game is over. And so that's we don't know when that's coming, but that's coming, and just because of the math. I mean, Greg Foss said it, this is not hard, people. This is just simple math. Keynesian systems need to grow the aggregate, money supply, because otherwise you can't service the existing debt. Now, what we don't know is when we get the crack up boom and the last hurrah. I mean, I recently listened to your fiance talking to David Hunter, and I found it fascinating because his view is that we're going to basically, melt up here. Yeah, melt up. But then the market comes unglued. And then when the market comes unglued, I mean, imagine this is hard for anyone to imagine, even me. But imagine the stock market went down 30 or 40%. I mean, talk about a shock, right? That would be a big, big shock. And that would be very, very deflationary. And one can be pretty sure that the response of the federal authorities would be to print to try and prevent a great deflation, and another Great Depression. and they would be successful at preventing a depression, but the print would be so large and so aggressive that it would make the COVID print look small. The Fed balance sheet would go to 20 trillion or something, and inflation would rage. And that was David Hunter's view, that we'd have 20 or 30% inflation. And perhaps that next wave is the one that sends us to a monetary reset. I mean, in my opinion, I mean, you talked earlier and you said, nobody is willing to give a solution to the problem. Yeah. I mean, I'll give you a solution to the problem. Now, I'm not saying there's any political chance that this happens, but in a way, FDR in the 30s, when he repriced gold, to get out of that deflationary event and that depression, was the solution to the problem. I mean, the solution to the problem is to say, is to come out and confess our sins, say we've got too much debt, we've let the thing grow way out of control, we need to fix it. And what we're going to do is we're going to do a monetary reset where 10 old dollars is equal to one new dollar. One new dollar is backed by X number of sats or Y amount of gold or Z amount of oil. And that's that. And we are not going to print money anymore. We're going to have sound money on a go-forward basis. And there would be pain in that transition, but we'd be back on a sound money system. And debt to GDP wouldn't be doing what it's doing. And the whole thing would work well again. And I say that because I know that when you look historically at the cases of where the money has gotten trashed in other countries, and it's happened many, many times, never with a world reserve currency unless you count the Roman Empire, but it's happened many, many times. And what happens is they reset to something that is sound, and the economy rebuilds. I mean, when you have, and if we're smart enough and lucky enough to not get into a war where we go kill millions of people or where we destroy the infrastructure, when you have sound money, we've got smart, intelligent, hardworking people. We've got great technologies. We've got AI. We got all kinds of fabulous developments. Nuclear power will make power lower cost, et cetera. Then the world will, it'll be a much better place. And, everything will run, and it will run really well. And as, as Jeff Booth says, a close friend and a guy I really respect, it will be a much better world on a sound money standard. But sadly, there's a chasm we've got to cross. We're in a broken money standard. We got to get from where we are now to that better world in the future. And you could do it right now. If we had the political will, we could go do it. The politicians could say, hey, this is the problem. We got to solve it. We're all going to vote for it. There's going to be some pain, but we'll make, programs to help with the adjustment. And now we're going back to sound money. But as you and I both know, Sam, I mean, look at who we've got as our politicians in DC. I mean, what are the odds of that, right? They're just not very high.
Well, we're kind of led by weak people, I'd say, that don't have the strength or the spine to do what's needed to be done. And then they're addicted to just trying to print their way out of it because it's the easiest option, right?
I think that's right.
That's why I, what you said, if inflation, if the melt up happens, the crash happens, they print like crazy, inflation goes to 20, 30%. The one thing I worry about is that, a few years of 20, 30% inflation, that'll get that to GDP down pretty fast.
Yeah, well, yeah, no,
but I think that would be playing with absolute fire because of the effects on society. Like,
absolutely.
Civil unrest, and then inflation, there is a psychological component where it gets going and it doesn't stop, right? And that's the fire that they'll play with. And I hope that they, go your route, and it's more of that transition to sound money or a reset, like you said, instead of trying to play that game, because that could be very bad. And again, the need for sound money would be even greater, getting people in that lifeboat. So it's going to be an interesting decade, I'd say. I mean, I think we're set.
Yeah, it's rather sad. And I've been accused of being a doomer, and I really dislike that label, because all I'm trying to do is analyze historical comparables and see what's happened. And, based on that, I mean, there is a better world on the other side of this. And, sound money people, what we can do is educate people to that fact and help people to understand that the money really is the underlying issue. I mean, I watch, blue-red debates, and I'm like, you guys are all missing the point. It's not about, all the things you guys think it's about. It's really the reason society is suffering the way it's suffering is because we built it on a monetary premise that's fundamentally flawed. I mean, going off the gold standard in 1971 was a really, really bad thing. But here we are. And all we can do, given the cards we're dealt, I mean, every set of generations has its challenges. I mean, the generation born in the 30s, they had to go fight World War II and risk their lives and defeat fascism. And, your generation, to the degree I'm around, still my generation, we gotta fight this monetary monster that's going to create some real disruption, sadly, but it's just baked in the cake.
Yeah. Like the monetary monster is like Goliath, and
yeah, it kind of is.
David and our slingshot is Bitcoin.
Exactly right. That's weapon, exactly right.
Yeah. Well, we're out of time. For everybody, we talked about the retirement kind of crisis that's been going on. We talked about how little people have to save and how to protect themselves. Larry is going on that webinar to talk about, how Bitcoin could maybe be incorporated as a way to save for retirement. And so check it out at this QR code right here below me. You can sign up and everyone can join. If you liked what Larry said, you can get some more of him by signing up to that webinar. And Larry, where can people find some of your work?
Yeah,
so about your fund
I'm a loudmouth on Twitter, so just under my name, Lawrence Lepard on Twitter. And then my fund, I do a macro letter that some people like to read, and it's free.
That's great.
We won't ever spam you, and it's at our website, which is EMA, the number 2. So EdwardMarkAlpha2.com is a website that describes our backgrounds. I've got a partner, David Foley, who does a lot of great work too. So
David's awesome.
Yeah. So, I highly recommend that, if people are interested, they take a look at that stuff because, like I say, it's free and it's worth what you pay for. But, we have a point of view, and I think we're right. But the path is going to be bumpy. There's no doubt about that, sadly. But that is what it is, right?
Yep, exactly.
I'm not Keynes. I didn't set up the system.
Well, it just reminds me of like anything that's stable. Like I picture it's just manipulated.
Right. What is it? The guy said about
volatility is vitality or whatever.
There was a great guy though, Markopolis, the guy who uncovered the Madoff fraud, said, anytime you see a straight 45 degree line in finance or financial returns, it's fraudulent.
Yeah.
That was a great line.
Yeah. Well, thanks again. Thanks for joining us. We'll have to get you back on. Check out the webinar with Larry if you guys are interested. Thanks for listening.
Thanks, Sam.
Great show. Thanks, Larry.
Happy to come back whenever you like.
Awesome. Thanks, Larry. Well, thanks for listening, everybody. Check out Pacific Bitcoin too. You can use the promo code Signal to get 10% off and 21% off if you use Bitcoin. So check it out at pacificbitcoin.com. I hope you liked that episode. We brought up some charts from Luke Groman, and that's actually the guest next week. So make sure you tune in next week. We have a great show with Luke Groman. Subscribe to the YouTube channel. That always helps us kind of spread our message. So if you haven't yet, really helps us. So subscribe, comment, like it. Let us know what you think. And I'm just going to continue doing my thing and helping spread Bitcoin adoption and education. Thanks for listening, everybody. Have a great day.